Hello, everyone, and welcome to Real Vision versus the Defiant, a new weekly show where we get to just jam on stuff at the intersection of DeFi, macro stuff, Bitcoin, cryptocurrencies, everything that is hot and exciting. You have two Brits for the price of one, plus Camilla Russo, fresh out of the kitchen from Chile, our chiefess at the Defiant. Welcome to the show. I'm excited to have you guys in the same Zoom space to talk about stuff. What's been on your radar this week, Cami Russo?
Yeah, well, first off, super excited to be doing this new show with you guys. I think it's gonna be awesome. Well, I guess like biggest news the past couple of weeks is Bitcoin ETF. You can't escape it, even though it's been such a long time coming. I think it's taken so long that it might not even be as big of a deal as it once was. But still, it's just like a huge milestone, a little kind of checkbox that has now been checked. So I think like that's the one of the biggest stories that we should probably dive into from, I guess, from our perspective, looking at Bitcoin ETF from a DeFi side. It's just like too late and too little. What came out of this from me? Like it's just been, it took the SEC 8 years to approve this really imperfect vehicle that's not even based on the Bitcoin spot price. That, like, as Raoul and I actually talked about last week, there's this just like difference between the price of the ETF and the actual Bitcoin price. Meanwhile, there's been like 500 different index funds already trading in DeFi. So, and in just like the 2 years that DeFi has been live. So to me, it just like highlights how much better this new financial system that's emerging from open blockchains is than traditional finance. It's, just more dynamic, and it just allows open innovation and gives access to investors to just instruments that allows them to better express their views on the market, which traditional finance isn't really succeeding at right now.
Yeah, this feels like they're just kind of shoehorning in a bit of crypto into traditional finance. It just doesn't feel right. I think, just having a boomer coin ETF on the futures contract is, it's not the right thing. But from a macro perspective, it's just more acceptance. So it's just another marker stone on the route. I thought the other interesting story this week was that story that it looks like banks are going to be able to hold Bitcoin on their balance sheets and for it to be accounted for. Again, anybody who's talking about the regulators are going to ban it, clearly they're not, because if the banks are now able to put it in their balance sheet and deal with it properly, it's kind of, these are all kind of just marker stones en route to the broader adoption, I think, even though they're a bit suboptimal.
But there's a lot of cognitive dissonance in all of this because you have these conflicting signals. You have Amazon, Walmart stepping in and going, help. I saw your show with Mike Novogratz where you guys were highlighting that particular factor. But at the same time, we have Gary Gensler and his hawkishness around this space. What are people meant to make of this? How are we supposed to navigate what is right and proper, even from just a kind of, from a broad distance? How do you make sense of all of this when there's so many conflicting signals going on?
So I think the point being is the traditional system is struggling to figure out how to fit this in, right? And we've just seen that with the Bitcoin ETF. It's kind of they're trying to fit it into an existing framework that doesn't work. So classic negotiating tactics would be to start with the hardest possible line first, which is everybody's going to prison. You're all terrible people. This is all illegal. The reality is, I think they've learned pretty quickly that there's a massive amount of money behind this and a lot of young people who have a lot of votes. So what's going to happen, I think, somewhere within this is a grand compromise. And that's what has to happen. And it won't be the securities laws. It'll be some new digital asset laws. And, I spoke to, on Real Vision a couple of weeks ago, the chief fintech officer for Singapore. And we talked about the Singapore regulation. They got it really right. They kind of sandboxed it. Then they said, listen, we want to work with you to help develop this space. And then on the retail side, they said, we can't tell people what they should invest in, what they shouldn't. We're just going to give them risk warnings and tell them these are risky things. And I'm like, yeah, that's a much more pragmatic, sensible way of approaching this than trying to use the 1934 law. So I think in the end, there's going to be a lot of bluster and it's negotiating tactics because everybody wants to get their side of the line. And there'll be a grand compromise reached probably within, I guess, 3 years. I don't think it's going to be quick.
But then that raises the question, a grand compromise on what? Because there's so many different pieces to this. There is commodities, the securities, and then there's stablecoins. And stablecoins should gain some clarity tomorrow when the FATFA guidance is published. And I believe that they are looking to provide additional information around what their guidance is on stablecoins. But of course, it is only guidance, and countries they're up to them whether they adopt it or not. But we're imagining that this is going to be a fairly overreaching and fairly harsh statement around what stable coins are. From our perspective in DeFi, we need stable coins to exist and be the backbone of decentralized finance. Otherwise, it doesn't work because the alternatives are too new to really depend upon. So I'm just curious whether there's going to be tranches of ideas around. It's so complicated because you can't just say this is crypto and here's the guidelines and that's it, done.
I think like it's really complicated to try to regulate markets in general. It's a bit kind of like trying to grasp at sand. Like sand is going to move where it needs to move. And you know, I've seen it in Argentina where the government is trying to regulate the dollar market. People are going to find ways of getting their hands on dollars, whatever the government says. I feel that the same thing will happen to crypto. Like the U.S. might enforce or try to enforce some stablecoin guidelines. Well, if that happens, then the market will just move where it needs to move. It'll move into more decentralized stablecoins that aren't reliant on fiat currencies, and we're already seeing examples of this, already working in DeFi. So, if there's a crackdown on fiat-backed stablecoins, that'll just provide additional incentives for people to go to the more decentralized stablecoins, which in the end might turn out to be a good thing for crypto, because the whole thing about crypto is it works when it's censorship resistant. So the more that regulators try to back crypto into a corner, the more censorship resistant it becomes. So I think all like regulatory crackdowns might slow adoption and development, but I don't think it'll ever be effective at actually stopping crypto.
Do you think that these decentralized crypto, the non-fiat backed ones, the algo ones, are they in a state yet that they can be usable, or are we still in experimentation phase? I haven't got a full handle on it yet.
Well, it's a good question. Almost all of them are experimental to the point where they could collapse in on their own weight. There is one, though, that is actually proving...
That doesn't sound like a stable coin by definition.
No, and that's the thing. They're algorithmic stablecoins. So they're defined by software and algorithms and everything else. And the idea of them is fantastic, but they tend to suffer these incredible black swan events where everything just sort of disappears and the floor collapses. UST, which is the stablecoin on Terra, it's a project we've covered a lot, is the one that seems to have gotten the most traction, the most support, the most things right. It's not perfect by any stretch, but it's backed by yield generating assets on its own chain, so Luna, and then a bunch of other kind of clever things are being piped in. But essentially, it's quite resistant now, and it's becoming increasingly resistant as more and more protocols are plugging into the different money markets that are built on top of it, like Anchor. So you're seeing other projects now take advantage of Anchor's 20% interest rate to build products on other chains and bridge over. And it's starting to become more and more resistant and less dependent on Luna as its collateral. So it's now got Ether's collateral, but soon it will have Solana's collateral. And that sense of this sort of spider's web of a stablecoin that is not dependent on one chain, that is leaking over to Solana, Polkadot, Harmony will be there soon, Cosmos as well, and all of the value that's locked in there, piping back in and generating economic value and economic turnover.
How do they generate yield?
So you have Luna, which is it's a staking asset. So you stake Luna and you bond it, and it becomes B Luna. And the staked rewards that come from that are then used to reward the people who stake their UST in Anchor. So the whole thing, it's too complicated to explain right now, but it is what on the surface it looks like a house of cards and it would collapse under its own weight. It was challenged heavily back in May, and a lot of things went wrong. They looked at that and said, okay, how do we ensure that this never, ever, ever happens again? And most of that's to do with people over leveraging and taking out loans that they were too close to the limit on. So the liquidation vortex happened and everything collapsed in on itself. And so the underlying collateral powering UST collapsed. UST lost its peg. They've now put in place quite a few different things that should mitigate against that. Of course, there's no guarantees, but as a stablecoin proposition, it is decentralized, it is algorithmic, and it is powering a bunch of other protocols built on that platform that are just so compelling. And what we're now starting to see is the likes of Kasama with its chain Akala, and Karura, which is built on Kasama. So there's like Polkadot and Kasama, and then there's these two DeFi chains, Karura on Kasama and Akala on Polkadot. You still with me? And these are two kind of DeFi focused parachains that is sitting on the Polkadot network that are starting to do similar kinds of things with their own algo stablecoin, because they've looked at Terra and said, this is fantastic. We need to be doing more of this. So that's a long-winded way of saying, yes, there is an algo stablecoin that works. It functions well enough to do large volume transactions on a large volume DeFi work on. But primarily, I think the reason everyone's excited about it is it offers a fixed rate of interest of 20%, which is just unheard of. Like just fixed rate of interest, just deposit UST, 20% APY, done. And that's very reassuring for people stepping in and looking to kind of get a foothold in DeFi and get a foothold in this space without gaining exposure to massive volatility. So it's it's one ecosystem that we've been covering a lot and are very excited about, but we shouldn't ever put all our eggs in one basket, of course. So,
I mean, the other one, Cami, what do you think about the Paxos product? Because they built that, Chad Cascarilla built that purposely knowing that regulators were going to come for them.
Mm-hmm.
So they did it the other way around. What do you think of that one?
Well, I think like of the fiat-backed stablecoins, Paxos seems to be one of the safest. Like they went the full-on like regulatory friendly way. They've always been really transparent with their holdings, even more so than USDC, which is just like very well regarded, I think, in this space. Like Paxos has been even, I think more transparent and just the peg, I think, is cleaner. Like it's more like just like one-to-one with actual dollars and not using so much like treasuries or like other sort of instruments. So I think that's a good kind of regulated alternative. I personally, I'm more excited about the decentralized versions, and just because of we're kind of moving into this world where there's this new financial system emerging. So I think if we try to projects that are trying to stand on their own without relying on the old world are just more interesting and have just like a higher likelihood of surviving in the long term. On stablecoins, I also wanted to add there's algo stablecoins, and then there's also just collateral backed stablecoins, but that don't rely on fiat, that rely just on crypto. Like DAI used to be that with just ETH. And then it started adding like like USDC and other stablecoins that rely on fiat. But that's another option that's kind of more tested than algo stablecoins. And it's just like a little bit more straightforward. So there are kind of different options to move kind of the decentralized stablecoin space forward beyond just like algos that are a little bit more experimental.
The issue I've got with DeFi is it's so bloody complex. You have to know what you're doing. But soon, give it 3 years, and it'll be on your mobile phone, and you'll just have the choice of this yield product or that yield product, and it won't be this ridiculous MetaMask hidden secret world where you got to give a nudge and a wink to find out how this thing works, and it's impossible to navigate.
I agree. I think it's like where we are in like the process of in the history of DeFi. We're at the very early days. Like it's only been 2 years since DeFi started. If you mark the start of DeFi with MakerDAO, so 2 years. I mean, people are still just like building out the infrastructure that'll be underpinning all these applications that, like you said, Raoul, I think, yeah, we'll just live on our phones and we won't have to care what's backing what's collateral, like all these different like yield
maybe
structures.
There's a risk weighting. Maybe you get 20% yield and that's a 7 out of 10 risk, and you get a 4% yield and that's a 3 out of 10 risk, and something simple makes it a bit more consumery.
Yeah, it needs to be more user friendly for sure. But I think there's also this like school of thought which I think is really interesting. Kevan Tarian, I'm mispronouncing his last name, but
yeah.
Yes, Taranian, the founder of a foundation, the NFT platform. He wrote a really interesting piece for the Defiant where he said the crypto wants to be seen. And he said how at a foundation they try to remove crypto and just like make it as Web2 as possible. But then they realized people actually need to know what's going on. Like they need to understand that this is just a new paradigm, that you're in control of your keys. You're interacting directly with smart contracts. So for them, they realize you can't strip out all of crypto. Like you can't just like people need to learn about interacting with like signing transactions and paying gas, and like they just need to understand like they're dealing with a new world. So I'm not sure who's right, but I think that's just like an interesting like different way of looking at things.
Well, there's the problem is the word decentralized. Once you say decentralized, it gets complicated. If you say open finance, then it's an entirely different conversation, because what you're saying now is, okay, any of you can get a loan. There's no bank that's going to say, no, you can't get a loan. There's no bank or protocol that says you cannot interact with this protocol. If you want to act in this space and be part of this space, you're allowed. We can't stop you. That's a pretty profound concept. And it's a pretty interesting idea that if you have value, you've created value, that's yours to do with what you want. And you can go and start to search around for something that works better for you. And I think we always try and add all this complexity and start talking like financial analysts, because that's the world that we've come from. But actually, you've done a lot of hard work. Here's your nest egg. Make it work harder for you. So this is why I love Terra so much, because the Anchor Protocol money market is simply drop in UST, get 20% done. I think we can all understand that. What you can do beyond that and go further with it, if you start borrowing when the APY goes up on the borrowing side and the market's bearish, that's fun. But you start with the savings side and you start depositing, and then you can start using those earnings. But 20% very quickly becomes something you can actually use as play money, and actually use that interest to start to explore the ecosystem. But you've got to get into the ecosystem in the first place.
My guess is when we go through a more protracted bear market at some point again, DeFi is going to explode, because that's the time when suddenly people are just going to say, oh, I can earn a 10 to 20% yield across these things while I sit out and wait for the next opportunity to come for capital appreciation. I mean, that's the game changer. As a friend of mine came to me and he's like, he'd sold out some of his Bitcoin into the rally up to 65,000. And he said suddenly it dawned on him that he didn't put the money back in a bank. He just put it in a stable coin and got yield. And he's like, oh shit, I never have to go back to a bank. And it was like the light bulb moment that we all talk about. But when it actually happened to him, he took some of his crypto gains out and thought, well, I might as well just get this 10% yield here. Why would I ever go back to a bank? And I think it's that process where that's where DeFi is really going to come into its own. Because also there's going to be a huge amount of capital coming from the institutional space. I've been speaking to a lot of these kind of big fixed income funds, big hedge funds. They're all looking at setting up DeFi books because it's perfect for them.
Well, there's a couple of deep implications to all of this. Firstly, if everyone retreats into the earn side of the market and they're looking for 20% yield, it means that the borrow side needs to step up its game. And so you will start to see heavy incentives on that side of the market. And so people will, the more kind of advanced users will step into the borrow side of the market and take advantage of enormous gains on that side, because to offset massive money, kind of safe money going into the earn side, the borrow side will just, it'll become the most profitable thing you have ever seen. That's extremely exciting, because it will mean that there's opportunities on both sides of the market, and the game theory will play out however it plays out. But for those who are a bit more savvy, borrowing will be more profitable than lending. Following that, you need insurance products. That's 100%. You need an insurance product that actually works. And to date, I haven't seen any that I feel confident enough that anyone would put a significant chunk of money into.
No,
Without
interesting.
that,
I had a long chat with Raoul Pal from Block Tower. I think it's going to be out in Real Vision in the next few days. And Ari was talking about, they went through every single settlement of every single thing that Nexus Mutual had done, and of any of the insurance companies, because they're all on chain. And basically, they don't pay out a lot to many events. So it's not, it's typical bloody insurance, right? You never get paid. Your house burns down, and suddenly there's a caveat that says, well, if there was a fire and your house burnt down, we don't pay you. But if it burned down without fire, then obviously we'll pay you everything. So it's this kind of shit that goes on.
Well, the funny thing is, they're not actually insurance protocols. I mean, they present as insurance protocols, but it's cover. It's like, and you look at the terms and conditions of these insurance products, and it's one page, and you're like,
so something's wrong here.
Yeah, something's not right here.
I'm trying to get my head around is I've been using Deribit recently, the option market. Now, a friend of mine came to me and said, okay, well, what happens in the event of a default or something happening within the ecosystem? And there's like this insurance bucket that's money set aside, and then it gets mutualized, the losses. But with the rapid growth of all of this stuff, do these exchanges actually have enough capital to deal with one of the big market making firms going bust or something like that?
Well, it did happen a few times, did it not? In the last kind of big bear phases, that there were big drawdowns, but most of the time I think they were able to cope with it because they'd made so much money.
But
and they're making money hand over fist to as long as they managed their reserve. I think, who was it? Binance was pretty well covered. I mean, as you would expect.
Yeah. And they've also actually been able to pay back not only like liquidations but hacks. So I think that exchanges have done a relatively good job with kind of having their like safety fund in case anything bad happens.
But also, exchanges were making so much money on ICOs and IEOs and all these kind of things, and preferential arrangements,
just like
with
trading
projects.
fees.
And trading fees. Yeah. So I think centralized exchanges are doing fine. It's decentralized exchanges.
And so when is Sam Bankman-Fried going to buy the Bahamas itself?
That's a good question.
I think he has to buy all the major sporting franchises in the US first, and then there's this project where he's like going to colonize the galaxy. But I mean, after that, for sure, for sure.
I mean, it's unbelievable to watch.
Yeah.
He just needs to topple Bezos as the world's richest man. I mean, after that, he'll shave his head bald.
I saw Elon Musk is going to be the first trillionaire. Like,
what does that even mean?
I don't know.
What does that even mean, Cami? How many numbers is that? Too many.
I saw it trending on Twitter, and that's
that's given us a beautiful
I bought
segue.
Tesla, by the way. I bought Tesla, took delivery on
the whole
Saturday.
company. You bought one. Which one did you buy?
We bought two. So my wife got the Model Y Performance, and I got the Model X Plaid, which hasn't arrived yet. It's like,
so we're gonna see you on TikTok going, "This is my new Tesla, yeah! Look at this, insanity mode. Shit real."
But I kind of liked them, and then took ownership of it, and it's like, oh, I get it. This is like driving an iPhone. It's a complete game changer in everything. And then you see all that kind of Twitter hating on Tesla until you own one, and you go, yeah, you know what? This is like Apple all over again.
You've actually given me double segue power here, because Sam Bankman-Fried is an investor in this project Worldcoin, and interestingly enough, this idea of automated driving is about to eat kind of one of the major employers of young adult males in the US. And we saw this new project, Worldcoin, come on the market with essentially its aim is to onboard as many people as it possibly can through the use of a chrome orb. It's going to scan your eyeball and then it's going to deliver you cryptocurrency to a wallet. And it's basically, yeah, have some free cash. And in return, we want to scan your eyeball.
So there is a precedent. All of this stuff sounds screwy. Then you go to India and they have a system called Aadhaar. Aadhaar is a digital identification system that's biometric. It's fingerprint and retina scans. And what that gives you is your identity anywhere. And it connects to your bank account. And they've got this thing called UPI, Universal Payments Interface, that is the largest, fastest settlement system on earth. Does more transactions than any other system of settling money. So now in India, with a retina scan, you can go and buy a pint of milk.
But who controls all that information?
It's in India, it's the government. That's fine, but what they've allowed is, yeah, but hold on a sec, because what's also there, they have something called India Stack. India Stack is your ability to store your own information, like your driving license, insurance, bank details. So when you want to cover KYC, you don't actually have to provide all the information, or you can exchange the information. So it's become this incredible system. And then they've allowed a fintech layer on top. And you're not a million miles away from having zero knowledge proofs around some of this stuff. And this is not built on blockchain. So this Worldcoin sounds like it's the most ridiculous thing ever. But if it's a move towards digital identity by using,
it's not.
You don't think it is? What do you think it is?
No, it's definitely not. No, it's a flex by a Silicon Valley bro to say, we understand Web3 by using Web2 network effects ideas, and we're going to onboard people using multi-level marketing. That's basically what it is. So you get an orb, you can run an orb in your local city, and then you can run a franchise of orbs, because these things are called orbs, and you make money off that. And the earlier you are, the more rewards you get. Does that sound at all sketchy to you?
I mean, it sounds preposterously sketchy. And it sounds like, I don't know if you remember the Woody Allen film, All I Wanted to Know About Sex, but I was too afraid to ask. And they had the orb.
Giant boob, yeah.
And the orb.
Well, it's not that. It's like, it's about this big, and this thing is incredibly complex and beautifully designed. It belongs in a sci-fi movie. But, you know, you've got people on the streets in Indonesia, in the Sudan, in Kenya, just going.
Actually, Chile was another of the first countries. Like I saw the pictures. It's like, oh, like that's right next to the Bloomberg office in Santiago, and people are like scanning their eyeballs.
And then they've got a bunch of students in France.
Information. They're gonna.
So
it's to prevent civil attacks, essentially, right?
Yeah. So basically, it's everyone on the planet will get some of this cryptocurrency. I mean, they don't even know how much it's going to be worth. It could be $10, it could be $200, but you get some of it. We all get some of it, and all we have to do is go and get our eyeball scanned, and that verifies us as a human that we haven't tried to get this before. So this is their solution to that. It's like they call it proof of person. So this proves that you are a human and that you are entitled to this cryptocurrency, and then we'll give you 10% in your wallet now, and then we'll drip feed you the rest over the course of 2 years. Congratulations, you are now a citizen of the world with a Worldcoin currency in your wallet. Problem is, this hash, I retina scan is turned into a hash. That hash is stored on a database. That database is centralized. Now, it's not tied to you, but it is tied to your wallet. So therefore, it's exploitable for sure. Edward Snowden was like, yeah, don't do this. And
I mean, if anyone just like can link your wallet to you, and then they have your retina scan. I don't know like what they can possibly use that for, but I don't know if I'd be comfortable with some hacker having that information.
No, exactly. That's the issue here, because you can't. If something goes wrong with your Ethereum wallet, you set up a new wallet and you're good to go. I can't just swap out my eyeball. I can't just go down to the local supermarket and say, you know what, my eyeball is compromised. It's kind of a new one, please. You know, that ain't gonna happen. So like that's the bit that's problematic here. And they clearly sat down and said, yes, the sympathetic worldview that we have right now is a silver orb and a retina scan. That that says humanity, that says the world. And I have so many issues with that. And also, like, there's a bit of a white savior thing going on here. They're going to Indonesia and helping the poor Indonesian folk who are in the villages on board. It just doesn't sit right. I don't know.
And
It's just,
beyond that, like once you, if you're able to get past all that kind of sketchiness and weirdness, like what do you use this thing for? Like how does it
That's the big question.
appreciate? Like
Is you're given a bunch of-
UBI. It's UBI. It's
okay,
UBI
and
in
then
an
you get
address.
this coin and it's worthless. Like okay,
It's
you
not
get this free
worthless. It's
money.
worth between $10 and $200, maybe.
I
Here's
mean,
the
who
thing,
Because
knows?
I mean,
Like,
if you give something to everybody, by definition, it's worthless.
yeah, exactly.
but it's a
By
fixed
definition.
supply. It's a fixed supply of 10 billion of these Worldcoin, and obviously there's more than 10 billion. Well, there's more than that's more than the number of people in the world. So what happens to the rest of it? Well, there's obviously a foundation and some VCs, and they get the rest.
And they all get
Sure.
rich.
They get the rest.
And then they dump it on all of us.
So
I mean,
it's
I
so
don't
many
know.
red flags I'm pulling out.
So
One
many,
here, one
so
here.
many red flags.
But it's just
Yeah.
funny. I mean, Twitter's basically just pissed themselves laughing over this. They've just looked at it and said, this is the most ridiculous thing ever, which probably in crypto world means it's going to do astonishingly well. Like Shiba is now bigger than Doge and is in the top 5. You know, who knows? It's a mad world out there.
Well, we're due to get Facebook's metaverse facelift this
That's
week.
right.
And I'm really curious about Novi, because if you're talking about network effects, so like you switch that on, bang, Twitter, Bitcoin
So,
tipping, all these
This
things,
goes back to the Paxos conversation because Paxos are going to build it.
Yeah.
So I
So
think it's
Paxos
on the
built,
Paxos rail.
yeah, Paxos built BUSD as well. And, no one really talks about Binance's stablecoin, but there's a reason they built it there. It's because it's compliant and all the attestation reports are there and they're visible and like they're in New York. So you cannot but be compliant if
And
you're in that city.
I think people are so driven by their own kind of views about Facebook that, to your point, Robin, is you're going to onboard 3.5 billion people to a currency system. I look at Facebook and say, right, you've got this kind of massive community of 3.5 billion. You've got a kind of organizing set of rules and principles, and you're about to introduce a system of money. That's a sovereign state. And Facebook ends up being one of the largest sovereign state, well, the largest state by people on earth. People haven't got their heads around this. We're creating digital sovereign states.
Yeah, well, and that's the thing about this idea of network effects, that when you look at crypto, it is a broad network, but what you get is these little clusters of energy and excitement that flare up and then die and flare up and die all over the place. And this Worldcoin model says we are all one simultaneously in the same way. And I think what's beautiful about crypto is that it's starting to force people to not be that, to say, you know what, you be really weird and really specific over here and do everything you want to do. And that just sits on top of this other stuff that's kind of connected. But that is our network, not we all use the same app and we all use the same. No, there's this kind of flow of stuff. That's when we're starting to move into the metaverse and starting to get this idea that the world is not built in cities where you go and you commute there and then you come back. No, the world is you and rotates around you the same way it does in a video game. Like everything you do, whenever you look around, it's on you. So you are the center of your own universe. That is going to be a massive deprogramming exercise for anyone coming into this space. But once you get there and you go, yeah, I am important. I'm what matters here. And I've got $1 to invest. So give me the Worldcoin.
And you start becoming suspicious of people like Zuckerberg storing all your information. It's like, okay, like I don't want that model anymore. Like I want to be I'm what's important. I'm holding my information. If I want to profit off that, I'll do it myself. Like I don't want this big corporation doing that. And so I don't know, with Facebook creating their own metaverse, it feels kind of like when Google tried to compete with Facebook, ironically. Do you remember like they had this Google Plus thing that completely failed? And it's like you assume because it's a big company going into like an adjacent space that it has to win. But it didn't. It completely flopped. Even though like more people are using Google than Facebook were at that point. So it's like I wouldn't like take it for granted that Facebook going into crypto or Facebook going into like the metaverse means that Facebook automatically wins because it has 2 billion users. Maybe, I mean, those 2 billion users won't want to use the metaverse on Facebook's terms. I think people are starting to realize they don't trust it.
Well,
I think
there is another
of an arms race as well of options. You know, we've got different options. You know, and you'll decide whether you want to keep your information yourself, or you want to share it because you want to use their version of the their corner of the metaverse. Because the metaverse is not Facebook; it's the whole kind of digital, fluid world that we live in. So I just think it's just going to create more and more innovation, because as people see, well, here's the big guys. This is what they're doing. What can we do to attack that and make a better experience? And it's going to be good.
Totally.
Well, there's also a really weird possibility here, which is that Facebook pivots and does transform into something. No, I can't believe I just said that.
No.
Ridiculous. 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 I did a film
Maybe.
last week about teenagers, and teenagers are they're the meek that will inherit the earth. They don't use Facebook. They don't care about Facebook. They're doing whatever the hell they want on their own terms and in their own communities, and they will undoubtedly be the ones that drive whatever the next phase of adoption will be. And that'll be very, very healthy and terrifying as well.
That kind of sums up the whole
teenagers
space.
taking over. They're much better than we are. Let's face it.
So tune in next week as both Raoul, myself, and Keepin are replaced by our teenage equivalents who have much more interesting things to say about this space than we ever could. Well, that seems like a perfect place to end the show. I want to give my thanks out to Raoul, Keepin, and of course myself for providing exquisite commentary on the world events. And we will see you next week for more of the same. And hopefully you have a wonderful week that isn't as red as it was today. I'll see you next time.
See you all. Fantastic. Lots of fun.
Loved it. See you next
Awesome.
week.